Good morning, everyone. I'm Peter Lipp, Senior Architect with Infosys Finacle, and on the stage with me is Louis Smith from our Research Center in Dublin.
Today, we're going to show you how blockchain technology is simplifying the trade finance process for our customers. To enable this, we developed the EdgeVerve blockchain framework, which caters specifically for the needs of regulated financial institutions. It enables a distributed, permissioned, asset-agnostic network, enabling the documentation and execution of transfer value. So while I log in, Peter will tell you a bit about how banks and their customers are already using this.
We've successfully piloted this blockchain for payments and trade finance, and our findings have been extremely positive. Right now we have 2 flagship implementations between major Tier 1 banks, Emirates NDB and ICICI Bank. This is promising considering that the Emirates to India remittance corridor is the largest in the world at about $70 billion USD annually. So, although today we're going to go focus on trade finance functionality, so let's go take a look. Now in trade finance you have the open account, and the open account is really a transaction that happens when the goods are shipped and delivered first, and the payments are made afterwards. Now this is really great for the buyer, but for the seller they're bearing the risk, and for the banks involved, they don't have full transparency into the process. So the payment ultimately happens and is triggered by the result of some documents flowing that include a goods receipt at the end of the process. For this demo, we're going to imagine that we're a US bank and the customer wants to import some sugar from India to the UK. So now using the blockchain, we're going to create a closed loop network that includes the sugar seller in Bangalore and the buyer in London. All 3 will have visibility into and transparency into the documents and transactions involved in this trade finance transaction. So in this case, we're logged in as the buyer in London, and we've initiated a trade finance transaction. All of the documents and all of the payments will be related to the transaction and be coordinated via a smart contract. So the smart contract also acts as a template. It contains the standard business rules that you need to make this process execute. And as you see, we have several transaction types. An import of goods is what we're going to do today, but you can see that there's several variations, all of which have slightly different business rules, so we have a different smart contract template for each one of those. In addition, you can see we're managing the whole life cycle of what's going on here, and as the documents flow and the business process updates, it's updated in the template that we have here. So let's take a look at what one of these actually looks like. Right now you have the visibility, the information that's visible to the bank and the buyer in this shared ledger. Now compare this to what is existing in most transaction systems today, in which it's extremely paper intensive. You're not looking at one version of the truth. You have error problems because of matching errors. And the money flow is very opaque in what's happening. So, and every one of the people are maintaining a ledger on their own. So in this case, we're dealing with a shared ledger. All of the parties are looking at the same version of the truth. If you can look at the blockchain reference ID there, long character there, that is the representation of this transaction within our blockchain. We can now look at the structured metadata of the transaction, and this is the information that is needed to make that smart contract execute. But we talked about the documents that need to be attached to that. And so we can see these documents that are associated. These documents can be generated by the buyer, the seller, the bank, customs agents, etc. They might be regulatory in nature, but once they're submitted, we have a facility in the bank to monitor and watch and verify the documents as needed. Now, I'll point out these documents are not stored on the blockchain. A hash of the documents are stored on the blockchain. So we've developed a shared document repository to go along with our blockchain technology. So when the buyer receives the shipment, and let's say a bill of lading is necessary to be entered, the document will be stored in the shared document repository and referenced within the blockchain technology, and vice versa. So in this case, the blockchain serves as a transaction layer for the documents and the transactions, It maintains the data integrity and privacy and security for all the parties involved. This means that with the buyer's permission, the bank can see all of the information involved in the transaction. With complete transparency in the exchange, the bank has a better understanding of what's going on. But this now also opens up new possibilities. It's possible to do a scenario like deep financing, where now the bank is talking about financing the exporters, suppliers, etc.
So in a real world, a system like this is entirely API driven, meaning instead of humans uploading documents, it will be uploaded by another computer system. This means the blockchain framework can integrate seamlessly with existing infrastructure. This could be your core banking system or your delivery system, such as perhaps Finacle. This enables workflow automation. And the result is a trade finance solution which integrates easily with current architectures, flattens settlement time, reduces errors, and enables inter-party trust.
So today we've shown you what our research and development teams have built. But we've shown you we can move money, it can create a golden record, and it can share documents. This leads to increased automation, straight-through processing, and better system integration and transparency. But what we also shown you is this is not imaginary stuff. This stuff is real. This stuff has already been implemented between 2 banks, and we're adding 7 banks to this network. And as you know, with network effects, that increases. So we're adding in the Middle East and Australia as well as Asia. So this is going to be successful. And we also want to talk about that this technology is coming fast. Right now, 1 in 3 banks believes that this will be, we will have commercial applications of the blockchain within the next 2 years. And that's one of the findings that we've published in our blockchain study we've done with Let's Talk Payment that we're publishing today. And come see us at our booth. This is available right now.